Hey everyone, welcome back to another recap podcast from SNXweave, where we give quick weekly recaps of news and important updates from the previous week from the Spartan Council and core contributors, as well as discuss what the Grants Council and ambassadors are up to, so let's get started. Starting off with some numbers, right now there's about $150,000 in daily perps volume on Andromeda and $2 million of cumulative trading volume, with $1 million in LP-backed collateral. The next immediate target for scaling base Andromeda is $20 million in daily volume and over $10 million in LP-backed collateral. With $1 million in open interest capacity, there's room for integrators to begin opening up to more users. Before the end of the month, Quenta will be adding a way to access V3 in their UI and make an announcement to traders. Some of the other upgraded features that they plan to offer alongside V3 are roughly 6 weeks out. Starting next week, Infinex will be opening deposits and trading will begin to ramp up in the next month. Next, the legacy market migration plan, which will migrate L1 SNX to V3 using the V3 legacy market, is being prepared. The perps v3.1 interest rate audit feedback is being reviewed, and the SIP to launch L1 perps is entering its second audit this week. Most of the feedback on the V2 to V3, from L2 to L1 migration process has been addressed. In other updates, the Jupiter listing is still waiting for the Oracle to be ready before the vote will be set up, and the SIP to move elections fully on-chain is in audit. Next, Kane released another blog post that updated his vision for the Synthetics 2024 roadmap and built on his previous October post, which proposed a series of market fit experiments. The new post reiterates the measures of success for the Andromeda release. Are LPs willing to collateralize synthetics with non-SNX collateral? And are traders outside of the synthetics ecosystem willing to trade synthetics perps? It acknowledges that the renewed interest in base creates the optimal conditions for testing on both of these questions. He also touches on the planned L1 ETH perp and the role it can play in scaling new stablecoin designs. The rest of the post details what an SNX chain might look like and be used for in the future. There were also several SIP presentations last week, so let's briefly review each of them. The first was SIP 354 for perps v3 asymmetric funding. Presented by Sunny and Afif, this SIP proposes introducing an asymmetric funding rate that adds to the net cost for traders when utilization of open interest is high. Such a mechanism is especially useful in isolated deployments without the benefit of the deep liquidity pools that perps v2 enjoyed, and is essential in order to scale liquidity from scratch on a new deployment. Afif said, for all intents and purposes, v2 liquidity has essentially been infinite, since the open interest has never reached even close to what the SNX debt pool can support. This additive funding rate both incentivizes new LP collateral to enter the market and encourages the closing of positions in a timely manner. Since V3 also introduces a collateral lock mechanism, which prevents LPs from withdrawing capital that is in active use, the asymmetric funding rate discourages the opening of new positions beyond a certain LP use threshold to help ensure some collateral is always eligible for withdrawal. The rates would be effectively zero as utilization increases to 80%. Then they would sharply increase between 80 and 100% utilization if all of the LP collateral is in use by the markets. If LPs try to abuse this dynamic, another option is to add fees for staking and unstaking. Jackson asked if this would make perps v3 less attractive than other centralized offerings. And Afif highlighted this is likely only to be a symptom of early stage liquidity constraints. Once the pool reaches the point where it can support all of the OI, this fee is essentially eliminated, and the fact that it goes directly to LPs should incentivize more collateral to enter the system. The next presentation was SIP 2054 to list Pendle on Synthetics perps v2. Bert explained that there is Binance perps liquidity, and this listing seeks to capitalize on a big trend in DeFi, yield trading on top of E3 staking. The next presentation was SIP 357 to add a staleness check for Chainlink. This is already a mechanism that exists in V2, but it wasn't incorporated in V3 at launch. This was pointed out by an integrator, so the change is being made now. The next presentation was SIP 358 to introduce locked OI multiple to perps v3. V2 had endorsed liquidators, but in V3, anyone can liquidate eligible positions. Rather than liquidating large positions in one transaction, there's a rate limit to reduce the market impact from these sales. This SIP proposes briefly locking LP collateral during this period where large positions are in the process of being liquidated. The main purpose for this SIP is to solve the timing problem between liquidations and reward distribution. The last presentation of the evening was SIP 359, which proposes bypassing checks on position risk reduction in Perps v3. This SIP aims to improve user experience by allowing users to reduce a position regardless of margin requirements. Currently, there's a bit of a UX issue with a check that will not allow users to reduce their position size without available margin to support the transaction. This is, however, unnecessary since a reduction in the position size is a net reduction in risk and requires no available margin. And that's it for today's updates. Be sure to check out our weekly recap blog post, share this podcast link, and let us know what you think and what you'd like to hear more about from SNXweave. Thanks for listening.